Basically, whole life insurance is a combination. It's a combination of an investment and life insurance. And a lot of times it's much more cost effective for people to separate those out, meaning instead of buying a permanent life insurance policy where the investment that's underlying in there is earning just the return on investment is really, really small. Like it's just earning a small amount of interest, where you can separate those things and get a term insurance policy and put more money towards maybe investment savings
in that situation,
or something like that. That could be a more cost, and usually is a more cost effective option for a lot of people.
If I could say, I shared this earlier, but in our situation with my wife Jesse's mom, Angela, and I, a long time ago, I had a term life insurance policy. I can't remember if it was 15 or 20-year term, probably 15-year term, for $1 million, because I'm the sole breadwinner in our household. And my death would cause a financial catastrophe to mom and you kids. All the kids were still at home. But I set it up at the time that I set it up, I figured out, or I estimated when I wouldn't need it anymore. And that's the length of the term that I had. And so, by the time the kids were out of the house and that I had enough, your mom and I had enough assets that my death was not going to cause a financial catastrophe to her, then we no longer need insurance and the term expired. So we don't need it. Many people are in that kind of a case. But we do run across people a lot that, are in their 60s or whatever, or later, and they have life insurance policies that they're paying for that they no longer really need. And the older you get, the higher the premium is, the higher the cost is. So anyway, if that's something that you need, or somebody needs help with figuring out, we're here to help.